All right, hello everybody. Let's take a second to recognize that the prediction we made 2 months ago based on study and facts and statistics, that simple statistics and numbers that we've got, came true. And it's weird how just simplicity always wins. A lot of people on YouTube try and teach you about what happened in the past without trying to anticipate the future. But to be a good speculator, you do have to anticipate the future. That's the level at which we are able to make millions of dollars, right? Like real money, not just living off. Remember in this video we did simple math, right? We got that zone from previous market cycles. We understand there's a consolidation phase, and we understood that. So I'll explain all that on the chart, but just I want you to focus on that line right here that we drew. And if you, I'll put this video in the next watch, so you can probably next watch it and maybe determine if this channel is something you want to subscribe to and follow and see some of the things that we try and predict and speculate, right? What we try and anticipate, basically. But previous market cycles, the first leg down always ranged between here and here, between those dates when measured from the top of the peak. And based on some just simple logic and bias, we said we're unlikely to go into the lower levels. We are likely to go touch the highs and be in line with the 200-week SMA, right? And that's exactly what had turned out. Why? Not because of luck or anybody knows the future, but because we were able to study the factors that matter most for the price, and the price just goes there because of these factors, right? And of course, we're not always right, and I'm not always right. One thing I was wrong about is I thought this would be much shorter, right? And this would not be as fast. Even though we overlook something, that when we break the 100-week SMA, which is this one, the blue line, usually we aggressively go right below it, but we did not actually measure how the time at which we reached the bottom from there. So if we did that, maybe we'd have understood that this would be extended in one way or another. And what I mean with that is, if I just have the full leg move right here, we thought it would be half that time that it would usually take, but it took just a little bit over. And I remember when we did this as well, we said with some standard deviations, of course we can go a little bit after it, below it, but we should be able to reach that yellow zone. We should be there. Of course, not exactly there, but there's some standard deviation. So we can deviate from the future and go a little bit ahead or maybe a little bit below, but that was very unlikely to be behind, right? And therefore we should sit exactly there because, well, nothing can, price goes where it must go. And studying human nature doesn't change even after hundreds and hundreds of years. Maybe it does change, but very, very slowly. And 2-3 cycles or 20-30 years is not enough time to change human nature, especially in trading. So if you read a lot of the famous, a lot of the books that the famous, or the interviews even, the famous traders, successful ones do, they tell you what happened 100 years ago still happens now. And this way, studying the past, we were able to anticipate the future. I'm not going to explain all those or why we had them, but we did better than most. Even the big YouTube channels, for example, Benjamin Count did in the number one crypto investor said this would, not drop so hard. It's because apathy, not euphoria. But you also have to understand that market conditions don't care about apathy or euphoria. They care about what market conditions say. And, he knew that many people knew that employment and economic conditions in America, which is the most important economy in the world, is just heading to bad, worse and worse. There's geopolitics and you fear of a corona, like Nipah outbreak, government shutdowns, and talk about civil war in America. That does not sound like good conditions to me. So price will have the bear market it should have. And that's why we went there. But of course, we were open to the idea that we could be, suppressed in the way that we can go down, and that's why you should always have many scenarios that could happen and assign probabilities to them. Being a good speculator is just understanding the power of probabilities, even in trading. So now we got to where we got. We finally got to this zone. 3-4 months we've been talking about this and studying this, and it has happened. And I hope it helped you, right? If you're a regular to this channel, I hope it helped you make better financial decisions. But now we should anticipate the future because we don't live in the past. As successful traders or speculators, if you want to be an investor, then just DCAing is simple for you. You don't need to watch this video, right? But if you're trying to catch the 3-month and the 6-month and the 1-year moves and the 2 years, and you don't want like to wait 10 years for your investment to really show some returns, and you want some Lamborghini really fast, then welcome to the channel. Welcome to the group. This is who we are. This is what I want to be, and I hope I can help you on your journey while I help myself on mine. So yeah, a little about me. I'm a computer and data scientist. I've been a crypto investor for the past 7 years. I'm thinking of also diversifying to commodities right soon, so I'm going to be studying that. I don't invest in anything I don't understand. So I will not invest in commodities until I understand the ins and outs of everything. So that needs to wait a little bit. That's why I'm not going to post anything about it soon, right? Yeah, I was able to turn a small portfolio into 6 figures last cycle, and this cycle planning to turn some more. Because everybody has goals and things, and this is just a place where I record my research. I record my blog. If it happens to be big, then sure, but if it doesn't, then this is just a timestamp proof of the things that the market can be predicted, that the market, the invisible hand can be seen, right? And on just by emotional control and just keeping it simple and studying the simple factors of economy and supply and demand, then we basically can understand where the price can go. And with adequate and good risk control of trading, then we can make sure that when we're wrong, we're not burned, but when we're right, we really make the money we want to make. It's all about risk control. Even if you know the direction, and even if you're right about the direction, you can lose money in the market. All right? It's not only about knowing where to go, it's about knowing about how to trade it and how to execute the trade. So I also give tips and tricks about how to execute the trade along the videos to help people become better traders. Now, where are we going, right? So what's next? Usually after you get such drawdown, there's usually a bounce. A bounce that I think will set the tone for the consolidation phase to come. I think we're now entering a consolidation phase. We have talked even about that before. Once we reach that level, we should enter a long consolidation phase. This consolidation phase can last historically from 130 days to 284 days. Okay, so it's not a short consolidation phase. It's gonna be long. A lot of people are gonna get burned there, and they're gonna continuously get stopped. So before we talk about the consolidation phase, I just want to touch on the short-term rally, relief rally that we might get, and how high we could go and how long it could last. Because that short-term relief rally will set the tone for the consolidation phase, and we can understand the levels that we play around and what levels we should break. Now it is clear this is the bottom. We have spoken that this could be at the bottom in many videos based on many factors, from moving averages to statistics about previous cycles and blah blah blah, right? You can maybe watch some of that and understand if this channel is something for you. So now we know the bottom level. Now there are 2 things that indicate that this could be the top. Yay. That could be the resistance level for this consolidation phase. One of them is if we go and analyze the first rally from the end of the first move right here, we can see that in previous cycles we had around 39%, 17 days here, and 28 days here, and 92% here. And this one, I'm not going to explain why I think this is okay, I'll explain it basically shortly. This happened in February, and this is the December strength, right? This was the December strength, even though they remained the low, but usually you don't. This was the December strength here. This is the low of the first leg down of February, which sets the resistance line for the whole consolidation phase to come. And similarly here, if you ignore that wick right here, this is the December weakness, the strength, and this is the February low that sets the low that we should break during the consolidation phase to enter the second leg down move. Okay, and that happens always. So what what I've put all the statistics just as usual in just a simple text box. Maybe it's in a different one. All right, even if we didn't put it, I thought I did, but it doesn't really matter. No, I actually did. I actually did. Wait, let me find it. Consolidation phase. No, not here. I have to click on phase. Consolidation. First leg down. First leg rally. Should be somewhere here. Where'd it go? Maybe it got deleted by accident. Anyway, if you take all the statistics, we're not really going to focus on taking the averages or anything because they wouldn't make a lot of sense. All right. So the first thing we're going to take is the highest range at which I always introduce some biases here and there. So far, they have worked out so well. It's just applying logic to current conditions and understanding that the cycle is a little bit more mature than previous cycles. It doesn't take much to understand that. Yeah, we're not going to run up. It just doesn't fit the whole other picture 90%. It's possible, of course, we should keep that in mind. That previous cycles, the first leg rally, we had rallied up 90%, but we had crashed for so much more as well, right? So that's why you rally up so much higher. And the market cap wasn't as mature and as large as now. So such moves would need extraordinary macro conditions to happen. Extraordinary, all right? There's some logic that need to be applied to all studies, right? So the longest period, this rally that we get after reaching the bottom of the first leg move is around 28 days. I'm sorry if that sounds more complicated, but maybe if you watch more videos, you'll understand the things that we talk about and the terms we give, right? So that was not last cycle, but the last cycle, right? 28 days. And I took the rally, which is most similar to this one, right? The breakdown that most similar to that one, which is last cycle's 40 to around 39%. So that would put us exactly, if we go up 39%, can be below, can be above. Of course, that's just a guideline, just like the previous one. But if we hit exactly the zone we are in, then we are in luck and we will take it, right? We will take what the market gives us. We don't want the market to do what we want to do. We just want to know what it wants to do and follow it, like swim with the wave, not try and go against it. That's all we need. That's all we need to make money in the market. All right, and reading the tape. So here and there, I'll also teach you about reading the tape. One factor about reading the tape is it was so, okay, I don't want to say that. It was quite probabilistically clear that this would be the bottom. That's why I exited my short position here, around here. Actually, I couldn't take profits there, and I was sleeping. And I didn't see that we hit that level. But when I woke up, I saw it somewhere above. But nevertheless, if you go to the weekly, you see such a wick, and that wick is dangerous in terms of like reversals, right? Now, if this candle goes and covers around this way of the wick, then that means price continuation. But I doubt we would go lower than from here. I think by the end of the week, we might see some strength, or we might just end a little bit here. If there's like a large wick like that, large wick body, same as that here, and you can see it everywhere, same as here. See here, it got covered, and that's why it meant continuation. You should get like quick reversals. If you get quick reversals, then it is a reversal wick, and there's likely a chance of going up. So yeah, the first thing that points out that this is that resistance and this is the support. This is the resistance is this 40%, and we might get there in 28 days, but this high can reach anywhere before just entering the downtrend and playing around the consolidation phase. The second one is we've talked about before, which is the support line of the that current phase that was there, that mini consolidation phase, usually serves as resistance during the consolidation phase, right? This is the mini consolidation phase. This is the large long consolidation phase. You can see it in here. You see the close of the weekly wicks that served as a good resistance where we got rejected and continued down. And similarly here, that's the December strength. Okay, the December strength rally at February low. This is how we know where we are and what we're talking about. And yeah, I mean, this didn't really happen, with all fairness. The resistance line wasn't on the body closes, unless you include that one, then it was, if you include that one right there. But it served as a good consolidation resistance line for the next consolidation phase. And one thing we have to also point out is usually get 3 rallies before the break. So that's a 1, that's a 2, that's a 3, and then we had like a break, right? Similarly here, if you go to the daily, I think we should see it all in the daily better. Yeah, that's a 1. No, not here. That's a 1, that's a 2, that's a 3, a break. 1, 2, 3, break. 1, 2, 3, break. Now, one thing we have to notice is that they don't all have to be higher highs or, for example, here we had a higher high, a lower high, and a higher high. Here we had a higher high, lower high, and a lower high. And you can say another mini lower high, but nevertheless, higher high, slight lower high, and higher high, right? But formally the trend was a rising flag, right? So that's what I would expect. I would expect to be one leg up, and then a second leg up, and then a third leg up. Higher highs, lower highs. I have no idea. Nobody knows. But yeah, that's the thing. That's the structure that Bitcoin usually follows in previous markets during that phase, consolidation phase. So let's look at how long this consolidation phase can last, because it is not short, and I think if we don't trade it right, it can. A lot of people who made the money on this short, or for example, who are thinking of buying the dip here, you need to consider, some things before trading this zone, or if you're considering buying in this zone or selling or whatever. To adjust your plans, of course, not financial advice. This is only one scenario that could work out. Anything can happen tomorrow. Nobody really knows. This is why risk control is very, 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 very important. If we go and analyze all the previous consolidation zones, so you just take the bottom and you see where the high was and where we broke down, and we get some numbers like that. All right, so if I do it to all cycles except one cycle, I want to point out. So on this channel, I don't like to hide anything. I like to say where is my bias, because the market is just throws you a curveball every now and then, and I try and anticipate those curveballs, right? So if we assume this is the December trend, and we ignore that there's a wick here, all right, just for the sake of study, and because everything is really being measured on February, and right now it's February, and yeah, therefore I included both points. So there's one point which measures the time from here, and there is one point that measures the time from here. I didn't care so much about how high we go here. I just included that one, but I also included that one too. Okay. And I had two average calculations, one with that, that low, that high, and one with that low and that high here that we spoke of. That's my bias. I am more leaning towards this than that, because it's very quite simple. If we include that, we're going to get our data skewed. I'm a data scientist, right? And sometimes you have to eliminate outliers. And this to me sounds like an outlier. It's just going to skew the data. Right now we're in February. We entered the consolidation phase in February. So why should we include data from December that can elongate the average and introduce some kind of bad bias toward us? Because we know that bear markets last 1 year, right? For example, from the high to the bottom, it's around 364 days, right? And yeah, so if this high happened in December, usually we find the low in December, and all we're trying to find is the low. Once you find the low, that's where you close your short. That's where you accumulate your Bitcoin, around this area. Of course, nobody can anticipate the exact low or the exact high. I've learned that many times actually, but I've been quite close a lot of times. For now, I have not caught the low or the high. I'll be honest with you, but I think it's possible. If you're a good trader, top trader, possible. All right. With that said, not the low and high, of course. It's some like reversal candles and some conditions, and I think can get pretty close. Okay, so if we get that out of the way, right? It's February. And this is why I include 116 days. That's in the third cycle, and 75% of the first cycle. Sorry, first cycle, and those are the outer ranged. If you calculate the average, then we get around 230 days, and I did not calculate the average for the highest. I doubt we would reach those levels for consolidation. Imagine the consolidation phase being somewhere around, let's take just 100%, just for the sake of it. Yeah, that's 99, right? Yeah, it doesn't make sense, right? Or how about we go on 60%, right? You see where it doesn't make sense. That's a consolidation phase before the breakdown of the second neck down move. It doesn't make sense. That's a renowned bull market, right? Therefore, we're going to take the low end of that range, the 46%, which comes from the previous cycle. And if you're saying, why you compare it so much to the previous cycle? Well, hump here, consolidation, hump, hump, consolidation, hump, hump, consolidation. I mean, it's a copy paste. It's a copy paste with some just like little bit of stretches out. Like, I mean, we do that in 5th grade, 6th grade. That's why we compare it to the previous cycle. And that's why I get a lot of data points from the previous cycle. Also, very, 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 very funny thing is you see this, right? Rising flag before we broke down. Yes, we said here this zone was this zone, and which we have correctly anticipated, right? We said that that zone was that zone, but we took that structure, but we were that zone and it was elongated a little bit. That's why the down didn't have that consolidation phase. We just went straight down because we took up more time here, so we have to cut more time to get on schedule. You see, if you're late to work, then you might skip on your coffee. Bitcoin was late to its appointment, so it skipped its mini consolidation phase. I think that was elongated here. We took the structure from here, put it there, and that's how we got that elongated structure. Now it would be funny and paradoxical, and investment loves paradox and confusion. It always leaves you hints, you just have to pick it up. If our structure now is this structure, which is pointing toward that direction so far, okay, it would be funny and beautiful. And beautiful things are always coming true when we say that somehow. Please don't kill our streak. Let's continue. That might be our structure. First, a rising flag, a sweep of the high, and a down below to the second leg down move where we reach the bottom of the bear market. And finally, we accumulate all the Bitcoins we want. All of them. All of them. Because Epstein, he did not touch Bitcoin's code. I believe Bitcoin is still pure. I know when dirty hands touch something beautiful, it can get dirty too, but I want to believe that this is the movement that we all want. We need something in this world. And we're going to have Bitcoin. All right. So we're starting to have that kind of trend in a wider range, and let's wait for that close. Could be just a wick. But if it's not, we have to change that hypothesis because it's very early and we're just making quite assumptions. I want to study that. I'm not saying it will be. I'm just keeping an eye for it. For example, look at that wick there. That here, that wick, we're starting to have that wick, right? And maybe we can play out some structure there, the daily, but it will be on the weekly here in some form or another. So yeah, if you take the average of the long days, so 106, 181, 284, sorry if that's confusing, but I tried to explain it as good as I can, but you can watch Bitcoin, the big drop no one talks about, which explains all this math in details. And maybe I'll make a refresher. But for now, we don't have enough time. We have to study the consolidation phase, the next steps of it. Yep. So if you take that, that's 230 days, that reaches here in September 2026. That if we top in October, I think we find a bottom in October, and that only uses a month because go down and week up and or consolidate down there for a little bit before we go up again. Sure, possible, of course, maybe even after, right? It's possible, but this is my maximum for now. And things can change, of course, as we see, as we read the candles when they get printed out, and we start to understand more economic conditions as they approach. Because the future is more unclear about than the the near future is more easy to predict than the far future in a way sometimes, right? But sometimes you can understand that in 10 years this will happen, but this is not 10 years, it's a few months. Need some time. But I also took the average using the 116 days, not the 284. When you take the February low, not the December of the first bear market cycle drawdown, then we get around July, which is what I'm more leaning towards right now. That's why I have that line there, and I will try always remind you guys of that. Yeah, I think we might end there. Of course, we might end somewhere here. Nobody knows really, but just having these boxes of telling us this is the consolidation phase, and it's gonna might range to that time period and that price, then we can analyze. And then what I like to do is simple. Now is going to be starting some trading tips. So if you just got what you wanted and you're just an investor, you can leave the video now. But if you want to learn some of the trading tips of what I'm doing with this information, then do please stick around and like and subscribe if you like. First thing I like to do is set a no trade zone. I am thinking of shorting the market, with all honesty, right? I know a lot of people don't like that, but this is my no trading zone. And you can apply the same ideas to the, okay, let's just make it maybe purple, to going long or just orange. You can use the same strategy for going long, going short, in between, doesn't matter. All right. This is no trading zone, because here people get chopped. Let's make it capped as well. No trading zone. That's the first thing you should outline. Where is the trading zone? If you're going short, I would kind of, if this is the high, right? If this is great resistance where we shouldn't break, if it breaks, then our hypothesis is proven more to be wrong, right? So we should cut our losses above that zone. You see, this is high information area, okay? It's high information area, and of course this zone can be adjusted, just we need to see where we reach in the first rally, right? And that will set the tone for the trading later. Also, trading is not doing nothing at the same time, just studying and observing, because it's not your trading that makes your money, as Jesse Livermore says. It's your sitting that makes you money, not your trading. It's your sitting that makes you money. Wait for the right opportunity, enter and exit. Wait for areas of high information, high validation, and high invalidation. High validation means if price goes up here and goes down, I'm right. But if goes up here and goes higher, I'm wrong. But if you buy here or sell here and the price just, where is your invalidation point? Like, are you going to take up huge losses before you know you're right or wrong? And that's gambling. That's not speculating. That's gambling. Okay. So if thinking of shorting, I would place some, take limit order there and there and there and there, and just put them like hierarchically and maybe some little bit above. But I know that if price reaches that zone, then my idea is wrong. And if it is wrong, I will exit. I will put my stop limit right here to exit. Okay? When you're wrong, you exit no matter what. And that's why it's important where we enter and where we go, where we don't. So again, trading is not only about knowing the direction, it's also about how to execute your trade logically in a way that limits your losses but extends your profits. Now, if we are wrong here, if we are wrong, it's simple to know we are wrong. We get stopped 10%, no problem. But if we are right, goes up, sells, goes down, maybe we hold it a little bit during the consolidation phase, but overall we would have accumulated a large position so that if we break down, you're not a 10% move down. You're a 40, 50, 60% down, which is nice. If we go from here to here, that's a 54% chance. I don't think we're going down there. Of course, I haven't studied the second leg down move that much, but from my intuition, what I know about what we studied about the second down leg move is we might get somewhere. Yeah, we might go somewhere like here. So around 50%, here to here. That's where I anticipate. That's why I want to get my orders at the top, not at the bottom. Another area where you could actually get your orders, oh, I made that so, is at the bottom of the zone. Okay, so the top is good, but I would not put my full position there, of course. Because if I accumulate my full position here, and then the price just like boop, then my full position is too large and I'm gonna die. I'm gonna lose a lot. And you should think about that too. You should put some of your position there. Of course, everybody should have their own methodology for how to trade, and you should find your trading style that fits your personality. But you can learn some tips from me, same as how I learned from other people, right? And this is really not my trading. I picked some pieces from here and there and there and there for my favorite traders, and this one I think goes to Etsukoda, yeah, or Bart. In the first Market Wizard book, there's the first trader that props the tops, right? And then he extends his position down there, which works out very good. Okay. Anyhow, you would put some of your position there, or I would put it, however you do it, and the large position should be once you have been confirmed. So the time is approaching, you're seeing reversal signs, you're seeing higher selling volume, like as such, not as such. As such is a volume of reversals, extreme emotion. It's somebody gone crazy and had a midlife crisis, and now they're turning their life around. That's what that says, right? This is just like we're getting stressed, and the price is more likely to go down, right? So that's reversal volume, that's continuation volume. Yeah. So after there are some signs that the market is starting to go down, and macro and economic conditions and the chart and the ticker, everything tells you we're going down. That's when we, after this zone or whatever, I don't know when that happens, I'll start also adding a little bit here. Little bit. But my biggest position will be on the break here a little bit and on the break. When we break the structure, when we break moving averages, when we break something, the rest would be there. I just want to get higher average prices. But the real trade is when you break. That's my trading style and tips, and this is what I think about the market. I hope you have learned something, and I hope you enjoyed it. Please do like if you did, and if you learned something. Peace out, and happy trading.